A developing story, FTX founder Sam Bankman-Fried tweeting out that Binance would be acquiring the company after liquidity concerns. Binance's CEO, CZ, tweeting out the highly dynamic situation, and we are assessing the situation in real time. Binance has the discretion to pull out from the deal at any time. Joining us right now is Brady Dale, Axios crypto reporter. Help us understand what's happening here. We're looking at Bitcoin trading down again this morning. Lots of questions and not a lot of answers.
I think the crux of it is that $6 billion came out of FTX really fast and they didn't expect it. But dialing back a little bit further, this does seem like a crisis that Binance founders, who's known as CZ, caused when he tweeted out a bunch of concerns about FTX's balance sheet and his plans to liquidate this token, which is crucial to FTX's business, called FTT. It's an exchange token.
I get that, and so I understand that there's like a cat and mouse game here, and maybe CZ is trying to push Binance, trying to push FTX into a bad place, so then they can pick them up on the cheap. I get all of that, but the idea that these companies and the idea that FTX was this unstable, that didn't have the liquidity. I mean, what does that say about where we are in the world of crypto?
This surprised everyone, including me. I mean, I think SBF really had a reputation for being a responsible actor out there. But I think it shows that, this is a market where everyone is addicted to gains. And, Sam Bankman-Fried has always made it clear that the only reason that he was in crypto was to make a giant pile of money. He saw it as the best place to do that. And all he cared about was, generating more of that. And so, there were two parts to the story, right? It was his Alameda trading desk that it looks like was the problem. It was overexposed to FTX. And Alameda trading is actually older than FTX itself. And, this is, on some level, you can argue, and Gary Gensler, the SEC chair, has talked about this. This is what happens when you have a trading operation inextricably linked with an exchange. As far as we know, Binance doesn't really operate that way, at least not at the same level. But fundamentally, the company that FTX Alameda is, it's a trading company.
Okay, but Brady, let's go backwards just a little bit. And I read this aloud on television last night. This tweet from Boaz Weinstein. So I'm going to read it to you. Maybe you want to take it. It says, every day I read about crypto, I understand it less and less. FTX was in talks just 2 months ago to raise equity, $1 billion of equity at a $32 billion valuation. So there were smart people ostensibly around the table who thought that this company is worth $32 billion. This isn't just these guys. Binance then threatens to dump $500 million of FTX tokens. This is what you're suggesting, created a little bit of the problem here. And then the whole thing just collapses. He says, I said, explain it to me like a 5-year-old. He said, this is Boaz said, explain it to me like I'm a 65-year-old.
The thing that happened, and we don't really know, is, it's hard to overstate how rapidly FTX was growing. And I think people thought they had a chance of eventually overtaking Binance. CZ didn't like that. News came out from CoinDesk. Ian Allison reported that Alameda Trading was overexposed to FTX's token, FTT. And CZ, being very smart, saw a weakness and he pounced. So he liquidates his FTT. He does it on the open market. He forces FTX to try to defend the price of that, but everybody else is selling too. And that engenders general fear in the crypto market. Look, folks in crypto have seen liquidations at centralized exchanges a bunch of times before. It doesn't take much to spook them. CZ knows that. And he spooked the market, people ran, and he had one less competitor on the table. The man is really he's the apex predator of crypto, and he proved it this week. Nobody saw this coming.